This is Ryan Coombs, Vice President of Research and Strategies at Carty & Company. Here's your weekly market update, ending the second Friday of May 2016. Despite dim prospects by retailers such as Macy's Incorporated this week, the U.S. consumer appears to be making a comeback. The Commerce Department reported that sales at retailers jumped in April by the most in a year. This after a 0.3% drop in March that was smaller than previously reported. Core sales, which strip out categories such as autos, gasoline stations, and building materials, advanced 0.9% last month, the most since 2014. The average spread between the labor market and retail surprise indexes has widened to 0.93% compared to a 0.55% average during the past 2 years. This trend underscores a surprising fact that the U.S. labor market strength has not yet translated into stronger retail sales growth. An absent consumer is curbing the pace of U.S. economic growth and weighing on the Fed's decision to raise rates. Consumer confidence climbed to an almost one-year high in May. Americans grew the most upbeat about incomes after inflation than at any time in a decade, the University of Michigan's report showed on Friday. The broad-based advance in expectations, bolstered by optimism about projected real income gains, is an encouraging sign that consumers are looking past the first quarter slowdown and may boost spending, which is the biggest part of the economy. That will help usher a strong rebound this quarter and ease concerns among economists that household consumption wasn't robust enough to make up for the more modest gains elsewhere in the economy. In fixed income, a stronger U.S. consumer and yield-hungry foreign investors are flattening the yield curve in the U.S. Treasury market. Short-term Treasury yields rose for a fourth day as traders reevaluated bets on Federal Reserve policy tightening after the strongest readings on U.S. retail sales and consumer confidence in a year. Meanwhile, long-term Treasury yields dropped, pushing the spread between 2- and 10-year yields close to the narrowest since 2007. Buyers purchased longer-term U.S. notes this week as negative yields on international government debt make Treasuries attractive in comparison. A class of international investors bought the biggest ever share at an auction of 10-year notes, which sold at the lowest yield in more than 3 years. At the same time, short-term debt fell amidst strong U.S. economic data. On speculation, it will prompt the Fed to move more quickly than previously expected. Benchmark 10-year yields fell 4 basis points to 1.71% on Friday. Yields on 2-year notes rose 1 basis point to 0.76%. The gap between 2- and 10-year yields flattened for a fifth day to 94.3 basis points on Friday, the lowest on an intraday basis since March 9th and the lowest on a closing basis since 2007. U.S. stocks fell on Friday, with the S&P 500 experiencing its worst weekly losing streak in 4 months. Lackluster results from retailers were a factor, while data signaling consumers remain healthy added to the case for higher interest rates. Despite signs of volatility among consumers, companies that rely on their willingness to spend were among the biggest losers on Friday, as Nordstrom and JCPenney added to the list of disappointing results from department stores. Gains in Apple faded after a brief rebound from Thursday's drop to a 22-month low. Losses among banks accelerated in afternoon trading on Friday, while energy producers retreated as crude prices fell for the first time in 4 days. That sums up your weekly market update, ending the second Friday of May 2016. For more information, please visit our information center at www.cartyco.com. And for real-time updates, follow us on Twitter at Fixed Incomes. Thanks for watching, and have a great week.